Welcome to Revere Asset Management's Your Money with Danny Stewart.
The market will always overshoot to the downside and to the upside.
And Don Vandenborg.
Because it's not how much you make in the markets, it's how much of that you can keep.
4 stocks and 7 sectors ago, our IBD founding fathers brought forth on this continent a new investing system conceived in relative strength and dedicated to the proposition that all stocks are not created equal, and that under this CAN-SLIM system shall have a new birth of investing freedom of investors, by investors, and for investors, and shall never perish from this earth. And folks, do you have Gettysburg Investing? And with that, we're going to go to the team later, and they're going to talk about their 4 stocks, their favorite stocks, and maybe even throw in a few sectors that they like. Folks, we had so much positive response from the I Have a Dream, I Have an Investing Dream from MOK that I did a few weeks ago. I just had that thought, and I thought, you know what? We got to follow that and follow up with some great American heroes themes. So who's next? So if you listeners have any thoughts on that, who is your favorite American hero? I mean, we are called Revere, and I guess we're going to have to do one on Paul Revere because that's our namesake. But in any event, this way you won't have a pie chart, asset allocation, buy and hope portfolio. You won't have a public defender's portfolio, but a real lawyer's defense portfolio. And by the way, our portfolios not only have real defense, we've got offense too, with rules, buy rules and sell rules. So if you want to learn about that, just reach out to me. And speaking of IBD, Don Vandenborg is not going to be here today because he is in Las Vegas at the IBD Founders Club with Jim Ropel, David Ryan, Mike Webster, aka Webby, et al., the whole team. And so he's having fun today. So today it's just going to be me, Ted, and Connor, and we're going to get right into the markets. Now, I do have some interesting articles in the show notes that you can go look at. I love one. Someone said, well, it was actually through the, advisors that they send me, these Think Advisor or IQ Advisor, whatever, these different advisor periodicals. But one was an interesting article about Paul Krugman, shamanism, the shamanism that is Paul Krugman. It's hysterical. And then there's another one, Kava, Mediterranean Marvel or Short Seller's Nightmare. That's a good one. Commercial real estate coming back to life. I'm not sure I agree with that one that much. 60/40 Glidepath is dead for one simple reason. I won't bury the lead, folks. People are living longer. That's the real reason. So I just saved you reading 3 pages of articles, 3 pages. And the 10 riskiest stocks to avoid. Speaking of which, those 10 riskiest stocks to avoid, Vistra, VST, it's up 137% this year. Costco, NRG, Progressive, Intuitive Surgical, ISRG, ARM Holdings, ARM, Plantier, PLTR, Wingstop, Trade Desk, TTD. We've owned almost every one of these. The question I have, though, is Costco's up 34, NRG Energy 59. How come they didn't tell us to buy? Why didn't they give us a buy signal a year ago before these things had the big run-up year to date? Why aren't they telling us when we should buy them? Why are they telling us they're too expensive now? But just because a stock is high-priced does not mean it can't go higher. One of Bill O'Neill's favorite tenets was you want to buy high and sell higher. And that trying to bottom fish, picking stuff off the bottom was really junk off the bottom. It may take years for someone to recognize. In any event, we'll go over all that. And one other article, the new Social Security bill that's being proposed will increase the burial death benefit. It's called the death benefit is for burial. It is $250. So if you die today, Social Security will give you $250 to bury you. That covers like 2 handles on the coffin, I think. Anyway, they're going to increase it. Well, Zach's laughing over there, a little cold maybe. Anyway, they're increasing it to $2,900, finally a significant increase, and then they're going to index it to inflation every year. So that's going to be really good. When we talk about these risky stocks later, I'm sure the guys are going to talk to you about how you can handle it, because a lot of these stocks are just going to simply continue going higher before they pull back. Right now, the market's setting up and it's looking pretty nice. All right, and we'll get to that in a minute. I'm just going to go over the mailbag real quick, and then we'll go through. And I do want to talk about bonds, because I talked about this switch from going short-term to long-term. All right, mailbag 924 MB. We're going to toot our own horn here. This is a client. Great to see a solid 10% gain in Kava since August. Me, let's hope people continue to love Mediterranean. Also, the Insider Monkey blog about Kava, he actually sent me the article, Mediterranean Marvel, a short seller's nightmare. Aren't those the same side of the coin, different sides of the same coin? If you're a Mediterranean Marvel and you're bringing people in and your stock is strong, isn't that a seller's nightmare, short seller's nightmare? Anyway. All right. Now this one is actually from a client, and she has a mother who wants just safe money. She's elderly. She's only 90, 92, and they're just trying to get her to live out the rest of her life with some safe money to help. And they were doing that T-bill and chill trade, that short-term money market trade. And remember, Ted, can you bring up the yield curve? Remember, folks, I've been talking about it the last month or so, 2 months, about how the short-term treasuries were going to go from 5 or 5.2 down to 4.5 very quickly over the next month. And then they're going to go down to 4.25 or 4 the next time Fed lowers rates. So if you look right there, Ted's got on the screen, 3-month treasuries now are 4.7, 6-month is 4.5, 9-month is 4.1, and 1 year is 3.9. So folks, we're already down to an average blended rate of 4.25 or 4. Okay? Long-term bonds have a higher yield now, or at least even. The yield curve is uninverting. Anyway, I had recommended that her mom go longer in the yield curve, but there'd be some little fluctuations. So this is it. Good morning, Dan. Looking at the ETFs in my mom's, Morningstar gives the following ratings. BLV, 1 star. SPLB, 3 stars, EDV, 2 stars. Looking at TLT, surprised it went down on the news of the 50 basis point cuts. Maybe just a small blip on the radar. Hope your day's off to a good start. Talk to you soon, KC. Now, and she was kind of a little worried because the mom's portfolio is down slightly about 0.8% since they transferred in here, but the bonds were doing pretty well over. She got kind of positioned a couple weeks earlier. But I said BLV is a Vanguard ETF, so no worries about the issuer. It is also government and AAA rated long-term bonds with a current yield of 4.3. So it's already right at the same yield as the short-term bonds. Although yours was probably slightly higher. She bought it before she transferred in. Those ETFs have done poorly over the last few years, but the cycle has reversed. SPLB is a corporate bond ETF issued by Spider, SPDR. So no worries there. They're primarily between BBB and A, but it does have some AA and even less AAA. But it's why their yield is 4.83, so already higher than all the money markets. It still is investment-grade diversified basket of corporate bonds. In fact, all of these ETFs, with the exception of EDV below, which are pieces of Treasury bonds, are diversified against an index/genre, meaning Treasuries, corporate, or a blend. Okay. EDV is also issued by Vanguard. It owns long-term Treasury strips. So they actually take a bond and they'll go out and they'll take off the payment in year 9, 10, 11, 12, and they'll strip those payments out and create a security out of that. It's still AAA rated. It's a Treasury bond. It's just a piece of a Treasury bond. Interest payments and or principal payments are, quote, stripped off, and the bond is divided into interest payment pieces out in the future. This is why the current ETF yield is only 3.9, because it doesn't have all the interest payments, but it is more sensitive to interest rates. It should have more capital gains as rates drop, but is why it is only 20% of the portfolio and is a little more aggressive in terms of duration, meaning almost maturity, same thing. Stars don't, this is Morningstar, stars don't matter for the following reasons. Folks, you need to understand this if you're investing in bond funds. The structure of those funds makes them quirky. Okay, the following reasons. These ETFs have been in the wrong part of the interest rate cycle for years and have performed poorly and thus have weak numbers. But even within their own genre, these broad diversified ETFs cannot do more creative hedging, shorting, or even changing the duration, meaning going shorter in the yield curve, because these are long-term index bond ETFs during rising interest rates as other ETFs might be able to do. Thus, during rising rates, these ETFs will have bad stars simply due to their structural construction, which constrains them as a plain vanilla ETF. However, when rates are dropping long-term over the next few years, not just 2 weeks, these should perform just fine with hedging unnecessary. That's when their Morningstar numbers will likely change and become higher relative to their peers. The risk in long bonds are twofold, folks: rising interest rates and inflation. Either rising rates will cause bonds to go, either of those rising, inflation or rates, will cause bonds to go down. Either falling will cause bonds to go up and money market to decline in yield. We are now in that part of the cycle. Don't overthink it. Are rates coming down or rising? Is inflation coming down or rising? I believe this was simply rates backing up after having a big pop lower. So what happened is people were front running the Fed. And so she got these bonds a couple weeks ago, and now these bonds just kind of backed up because it just doesn't zigzag up or down. What are your alternatives? Alternative one is, if you don't want any volatility at all, simply go back to the short-term treasuries and CDs, the T-bill and chill trade, and you'll end up yielding 3%, maybe 3.5 over the next 4 to 5 years. Maybe even be lower than that, actually. It is not ideal, but you would almost certainly cannibalize the account over time. However, it would not fluctuate. I never meant to give you the impression it would only go up from inception, meaning bonds. As you know, there is really no such thing as risk-free. It is an illusion because of purchasing power. But with short-term horizon of, say, with a short-term horizon of, say, 5 years, risk of future loss of purchasing power is much lower because of inflation. The big inflation is already incurred. Okay. The last alternative, I don't think is really an option based on what you told me, is protection, because you'd expect more of a drawdown, possibly 10% or even 12 or 13. But we are getting much better at defense, but you're going to get much higher returns. You're not going to get any major bear markets like 35%, but you're also not going to get major drawdowns. Okay. Now, thus, I believe the two choices for your mom are to stay the course with this bond portfolio or to go back in short-term treasuries and CDs. Within a couple of months, the yield on the above bond portfolio will be yielding more than the T-bill and chill trade. It already is. By the way, I did add a few individual corporate higher yielding, and they were all banks the Fed would defend. Thus, everything in this portfolio is extremely safe, but it will fluctuate some. So, folks, if you're doing that T-bill and chill trade and trying to keep that 5%, it's now at 4.5 to 4.23, and pretty soon it's going to be 3.5 to 4. While the longer-term bonds are going to be a little bit more, a little volatile, not much, and they're also going, as long as we don't have inflation picking up or rising rates, they're going to be low volatility, and you got a good chance of making 7, 8, 9% with capital gains and the interest. And you could even make low double-digit capital gains depending on how low they drop rates. So it's very important if you're trying to get a fixed income and you're not worried about just this year, next year, but you're looking at a 2 to 5, 6, 8, 10-year cycle, you need to go longer in the yield curve cycle for sure. All right. Now, with that, without further ado, we're going to talk about the Gettysburg stocks. Ted, why don't you bring us up, do a quick market review, and then tell us which stocks are not created equal but are better.
Sure, Dan, I would love to. So let's start on September 18th. And that was FOMC, the Fed day, where we got that 50 basis point rate cut. Initially, that day, we pushed into all-time highs. As you can see, the highs of that day was 5689.75. The previous all-time high, as you can see right here, is 5669.67. After the Fed, we did reverse all the gains. As we noted on our videos leading up into the Fed and on and after Fed day, we said oftentimes, looking at the past, that the real reaction is the day after, or even just the week's close. And so the following day, we gapped up into new all-time highs. And essentially, the market hasn't looked back since. We backed and filled the following day on 920, but we've been just trending along the 8 EMA and really hasn't even touched the 8 EMA. So that's really showing how strong the market is currently. And on our videos, we also highlighted this support. Let me redraw that. This resistance area now turns support, and we're really just going to keep it simple. Good above the line, bad below. There's so many talking heads, macro, bearish macro fundamentals, but we're going to look at price first. And this base with nice VCP characteristics actually, and this clean flat tops level really gives us a nice risk on, risk off gauge. So that's kind of how we're using that as a mental razor to keep things simple. It's usually the best thing to do.
Okay.
I'll quickly go over the cues as well in terms of tech. We also had a nice cup with handle with volatility contraction in this base. As you can see the 3 contractions right there. We had a nice clean level above 485.54, and that coincides with this bearish engulfing day on 8/22. So we did break above. Yesterday we gapped above, and today we're seeing some back and fill. Mega cap tech is what is weaker today relative to other areas of the market like small caps, mid caps, Bitcoin, and some other growth areas. I just want to highlight that real quick with my trading view. Big 8 composite of Apple, Amazon, Microsoft, Meta, NVDA, Google, Tesla. Actually, Mag 7, I took out Netflix. As you can see, that is down about 27 basis points today. And RSP, the equal-weighted S&P, and then QQQE, equal-weighted NASDAQ 100 are actually up on the day. And then another gauge for us is FNGS, and that actually broke back below this clean level after seeing a gap up reversal yesterday and now follow through to the downside. So that is a general brief overview of what we're seeing in the markets today. Definitely relative strength coming from names like mid caps, which in itself has a really nice tight right side. You can see some volatility contraction in there. Over this 574 level would put it into new all-time highs. You can't ever really complain about all-time highs. On the other hand, small caps, we've talked about this nice move up. Now the bull flag that was built, we broke out the bull flag, and this is really looking constructive, and it itself has some volatility contraction in the space as well. And over this 228.63 level would be a new 52-week high, and really maybe finally we'll see small caps see a smooth uptrend.
Okay, let me put my Ted Terpenter on. When he's saying volatility contraction, folks, I know the stock nerds know what that means. But what that means is each successive pullback, and clean this up if I say this wrong, Ted, each successive pullback is shallower. It's less.
Exactly.
So you see how that's smaller, that's bullish. That means that all the selling is being absorbed by new buyers and more buyers are coming in, and the selling versus buying is shifting.
Exactly.
Okay.
You covered it well. So that's just a quick overview of my thoughts of the general market. So next is showcasing a few names that both me and Connor think are the better names in the market right now, the names that aren't created equal, as Dan mentioned. So I guess for me, the first name, and I've been tracking this for months on months on end, and I've presented about Bitcoin many times. I still think it's going to present one of the fatter pitches. And the feeling I get out of Bitcoin now is when I saw the SMCI and NVDA chart development from summer of 2023 into January of 2024, when they themselves broke out of 6-month plus bases and made big moves. And so right now, Bitcoin, I'm not going to use IBIT since it's the ETF. I'll go to the actual Bitcoin chart, and I'll pull up a monthly chart first. On a longer term time frame, we have this enormous, really smooth cup with handle, extremely clean as well. And on the right side, we made about 400% move off the lows, and now we're almost seeing what I would think a perfect downward drifting handle. The volume patterns along with price are almost perfect. As you can see, you had 1, 2, 3, 4, 5, 7 months up on all green volume. And then within the handle, you have a dry up in volume, well below average. And what makes this even better is you can see these wicks. There are some undercut and reversals of the lows of the base and of the 10-month moving average. And each time we've been able to reclaim it. So now zooming in a bit on the weekly, you can see that prior move up, and I'll draw this line for you, this undercut reclaim of this base. You did it once here, had this huge shakeout on that when equities had that mini crash with that fear of the yen carry trade and recession. But that week closed back within the base and the higher upper ranges on volume. And that is what William O'Neill talks about as subtle signs of accumulation. Then again, we tried push higher, failed again, but then we undercut and reclaimed this level once again for the third time. So a lot of weak hands are definitely shaken out. I myself tried it multiple times and gotten stopped out for small losses, but that's completely fine because eventually when I do nail it, and maybe it's this time around, that will cover all those small losses and more. So now finally,
now hang on. What would be your entry point? How would you? So explain to the listener.
I have already entered. So yesterday, over the 65,000 clean level,
right?
You can see it's like a mini cup with handle within this huge base. This is more of a cheat entry. We're still within a range, so there could be more frustrations up here. But yesterday, I entered some Bitcoin for the set of clients that I manage, and so far today we retested that 65,000 level. Perhaps I can go into an intraday chart. As you can see, we broke out above 65,000, came back in, retested it, and now we're confirming higher. So on the daily time frame, the next really key level that I've talked about before is this 70,000 level. And what I ideally want to see is us come up to this level and build a handle and then take that out. And really over 70,
take that out meaning breaking above it. Take that out meaning breaking above it. Right. Okay.
Right.
Okay.
And that's what I would want to see. Of course, you can just fail back down, and then I have my stops in around the 62,600, 500.
So was it a starter position, or what was your size?
It's a half position.
Okay.
So in a way, it's a starter, but still a decent sized position, especially since equities and central banks around the world are loosening their monetary policies.
Sure.
We're in a decent environment, macro environment as well. So yeah, that's Bitcoin. Something I've been tracking for a while, and I've realized that a lot of my best trades do come from the ones I stare at and stock for months and months, like an SMCI or an NVIDIA. So, of course, I hope that becomes the case this time around. But
so let me ask you a question. Do you feel like I've heard this from a lot of people. I feel like this. I just wanted to know if you feel the same way. Do you think that certain stocks have like a pattern, or like certain stocks have their own kind of trading pattern? They get their own kind of cycle that they kind of form a pattern and you get used to it?
Yeah, definitely stocks can have their own character.
Yeah.
For example,
like a simple thing
like on this on this Bitcoin run up, the character of Bitcoin was it trended above the 10-week moving average. And when it finally broke and closed below, that's when it started forming this new base. So that's like one simple thing you could look for.
Okay.
Other characteristics would be like this name likes to gap down and close strong, or this name likes to gap up and close weak. So you might not want to chase a name on strength. Things like that could contribute to a character of a stock.
Yeah, I was just trying to make the point that if you follow a stock for a while, you kind of get used to its individual characteristics, and you might be able to miss a couple pitfalls that just that particular stock has a pattern, whereas other stocks may not.
Right. And Bitcoin actually does have a character. It loves to shake people out, like these undercut reclaims all the time. We traded Bitcoin earlier this year as well. I'll go on a daily chart actually because it gives more details. Starting off in February of 2024, so earlier this year, right before I think the ETF came out, the Bitcoin ETFs came out in this area, failed higher, and as you can see, shook out this level huge and quickly reclaimed, built this tight range right here, broke above this 44,000 area and really just hasn't turned around. So Bitcoin does have that characteristic of it liking to shake out, just like in this base as well, 1, 2, 3 times. And so, I mean, we want to look for shakeouts and bases because it gets rid of weak hands, strong hands accumulate it, and if they choose to, and that just makes the next move even better. And I could definitely show more examples later. Maybe I can do it in today's Friday video after the close, but I've talked about Bitcoin enough, so we'll move on. Second name I'll talk about, one of the top names, is Meta. It itself is also at an all-time high and of a huge, even more than 6-month base. And I found that I really like these longer bases after a huge uptrend, which Meta did have. And it was pretty sloppy in this base, but you could still point out some volatility, contraction. And when it really took out this 544 level, it's been trending quite smoothly. Why I like this name so much? Well, first of all, they're the parent company of Facebook and Instagram, and they're complete cash cows, just extraordinarily stable and growing earnings and free cash flow. But at the same time, they're an innovative, huge mega cap as well with their suite of AI products, such as Llama 3, which is arguably the most powerful. It is the most powerful open sourced large language model, and it's arguably the strongest large language model, even including the private companies. And recently, yesterday, Zuckerberg introduced Orion, their new AR glasses. Say what you want about it, but I think it's pretty cool, and there's definitely a lot of use cases that could come out of those. Definitely less bulky than the Apple versions, and the markets did like that, and they received multiple price target upgrades from various big bulge bracket banks as well. So this is the second name. I own this. Full disclosure, I have this for clients as well, just to put that out there.
Good.
So afterwards, third name, I've talked about this last week on the podcast. So 2 repeat names I still really like. Of course, can't forget about NVIDIA when we're talking about stocks that have a different character. I mean, just if you look at the weekly chart, and then if you ever studied the biggest winners in the past or William O'Neill model book stocks, this has super smooth, clean, linear uptrends followed by textbook consolidations, which is having again. We are in a later stage base, so it is more sloppier and wider and looser, but that doesn't mean it can't go on further. It has perfect characteristics in its uptrends with multiple weeks up in a row, like 7, 8, 9+ weeks up in a row, which just indicates pure institutional accumulation. It has 5 quarters of triple-digit earnings and revenue growth, and we'll see if that continues on, and that will be the primary determinant if this has more juice in it or not. It really needs to surprise at this point because everyone knows about NVIDIA now. Institutions that want in are in. So in order for NVIDIA to really have another outsized move, it would really need a surprise expectations from Wall Street. And so we own this in Grotection, full disclosure, and I also own it in clients as well. This was a really nice pivot, super tight pivot with all these moving averages and a power of 3 setup. We had this breakout on 9/24, couple days up, but today we're back in filling, which is definitely expected, because if you just draw a line across, you can see there's a lot of supply in this area. There's more supply in this area, which was more or less, it's honestly, that's why I was talking about how it's more sloppy, because if you look at a previous base, you really just had a clean level, and when it took it out, there was no supply on this side. And same with if you go back on this base, which is kind of compressed because of the formatting of the chart. But this is nice action. Now I'm really keying on this 130 level. Maybe we find support here, which is what I would expect in this previous resistance level. We come up here, back and fill, maybe retest it again, and then go up like that. And that's where I would look to add on. So that's NVIDIA. And then finally, CEG. Full disclosure, I own this as well for the gap up. And this was catalyzed by them partnering up with Microsoft, bringing them in about $800 million every single year for the next 20 years. So a $16 billion deal to generate power Microsoft data centers. They're reopening up 3 Mile Island nuclear power plant, and the market clearly loves it. VST is also in its group, which is doing really well too. And same with NRG. And they recently upped their EBITDA guidance as well yesterday.
And so those are those two stocks on the list that they say, run away, run away.
Yeah. So those are 3 of the major stocks in that sector. So I'll quickly go back to CEG. And CEG just additionally saw highest volume ever on its gap day as well. So that's a plus. And usually when you have a catalyst with highest volume ever, the odds increase that in the next 6 months. So we'll see what happens here. But power generation, as we talked about in previous podcasts, is one of the most important factors in the build out of AI. It seems like we do have a decent grab on, or decent foothold in terms of GPU chips with NVIDIA and other companies training the models, but now it's really about building out those data centers and powering those data centers.
Yep. It's going to take a lot of energy. There's going to be a fight between humans and AI for the energy. We're going to be starting to fight about.
Yeah.
All right. Is that your stocks? Is it time to go?
Those are my 4 stocks.
All right. That's very good, Ted. All right, Connor, what stocks do you have? What are your 4 stocks? Your 4 scores?
Yeah. So Ted mentioned 4 great names. Love those ones as well, but I've got different ones. So the first one is MicroStrategies, ticker MSTR. And this is a holding in Grotection with my clients as well. And so basically, Ted did a good job of talking about Bitcoin. And obviously, Michael Saylor, who is the CEO of MSTR, he owns a ton of Bitcoin, and he keeps buying. Huge, tremendous conviction there. So this one is a proxy to play on Bitcoin strength. But if you look at this chart, the ideal entry point was that 150 pivot. That's where we took it at Revere. And you can see it shot up the right side pretty fiercely. And it's coming into this 180 supply. So this is some resistance to watch. But in a perfect world, it comes into that 180 level and then handles out a little bit. Cup and handles in a large base are some of the best setups, and they can, sometimes finding low risk entries in the base. So then when it actually gets to the breakout spot, you're at a profit already. So you're operating from a position of strength. And so that's exactly what I'd like to see here. But Ted, go to the weekly chart. And this weekly chart looks somewhat similar to Bitcoin as well, but this is just a ginormous weekly cup and handle base. And so if it takes out 200, that's the resistance in this weekly base that could see some big upside from there, as there wouldn't be any overhead. And that's a common misconception, is when things get into all-time highs, people get worried that it's extended, but you should actually be thinking the opposite. When something's in all-time highs, there's absolutely no overhead. There should be less sellers, and that's something we look for. So this one's shaping up really well. It's trading nicely. Bitcoin has a lot of momentum right now, and this, in my opinion, is the best way to capture the move if you're not trading Bitcoin itself. And one thing I just wanted to know is Michael Saylor, who is the CEO of MicroStrategies, he gets a lot of riffraff on TV, and he's very contrarian and he takes bold takes. But if you look at his stock price in the last 5 years, it's up almost 1,000%. So you want to look for stocks that have proven that they can make runs, and MSTR fits that bill.
Yeah, he's a disruptor.
Alrighty,
that's another reason they take shots at him, because he's a disruptor.
Exactly. He's a visionary for sure.
Yeah.
Next stock is Tesla. And we own this in Grotection along with my clients, and some things here. So versus other Mag 7 Big 8 stocks, this one has been underperforming, but prices started to shift. You can see earlier, or if you go back to the daily, Ted, earlier this year, it had that big run up above the 200-day moving average, and then it had a pretty fierce pullback, and then it started to build higher lows, and it built above the 200-day moving average. So we're seeing a character change in price there. And as it was starting to build higher lows, you start to see those moving averages converge, and they started to hook back up, signaling an uptrend. And once it took that 230/235 pivot level with volume, that's when we got engaged with this name here, and it's ran up pretty nicely so far. And now what we're looking for is similar to MSTR. After this strong push up, it has the cup base that it's built here, and now we're going to be looking for the handle. So even if it pulls back into 250, 240, chart still looks healthy, and that's normal in my opinion, and that would set up a nice looking handle for it to move higher through there, because after this run up, it's still trading above the short-term moving averages, the AEMA, and it may need to rest a little bit. And that handle is exactly what we'd like to see. And if you go to the monthly chart, Ted, like you just were, a characteristic of stocks is of an uptrending stock is making a big move and then spending months to years consolidating before making another big move. And as you can see, this monthly displays that price action really nicely, building higher lows. And now it's been consolidating for over 2 years now in a big base. And I'm on the monthly chart, so the time frames are all fractional. So monthly, the consolidations are going to be even larger versus a daily, weekly, or like a 60-minute, which is short term. So this one looks good. And some fundamental things is with China injecting that stimulus into their economy, that indirectly helps Tesla. And then we also have their robo-taxi event in October. That could be a catalyst as well. So some things to watch for on this one, but price action looks good. And then, Ted, if you go to the next name, First Solar is my third name, another position that we currently own. And basically on this one had another big move earlier this year, which we were a part of, and we caught that. And then you can see the story didn't necessarily change, but the price changed. And that's just a key thing to note is as the price started to come down, the story didn't change, just the price. And then, so I had that harsh sell-off with the market, and then it started to build this base, and it was starting to build higher lows as well. The relative strength line started kind of consolidating out of that range and breaking out. And this one took 250 on volume is what we wanted to see. And now, as long as it holds above 250, this one looks good, and we'll look for this one to continue riding the moving averages higher. And any pullbacks into the 8 or 21 or a breakout retest of that 250 could be an opportunity to get engaged into this one. And we took a position in that yesterday, right? We took a position? Yeah.
Okay.
Yep. We took a position in this one yesterday, and we actually added to it today as it confirmed higher day 2. And plus, with the energy related stocks, electrical power theme going on here with the AI data center rollout, this one should benefit as well, along with rate cuts that help solar. They're a capital intensive business, and those are two little fundamental angles there. And then fourth stock is Coherent. This is one I own this one for clients, disclaimer, and this one's a little bit extended here. The ideal buy point was when it took out that 80 level with volume, and you can see in that chart all those blue bars that are stacking up. And once it took through 80 on volume, it's just been building higher highs ever since. And today it's actually pulling back a little bit, retesting the shorter term moving averages. And what Ted just highlighted on the weekly chart, it's clearing a huge weekly supply zone. And it's just right under those all-time highs. And once it can get through those all-time highs, we could start to see this one trend a little bit nicer. And then, Druckenmiller, pretty successful fund manager. This is a top weight in his portfolio. Just something to note. Sometimes, we want to swim with the institutions, and they can't cover up their tracks. We'll see them on the price, on the charts due to volume and price. And so this one's looking good. If it pulls back into the 21-day, even that 85 level, which coincides with the high volume close, that could be another spot to get engaged into this name. But it is a little bit extended, and it would be totally normal for this to pull back a little bit more. So really like this one.
All right. Is that all of 4, or you got another one?
Nope, that's all.
All right, folks. Well, listen, I hope you learned something today. And if you've got any questions or comments, you can always reach out to me. You can just go to revereasset.com. Up in the right-hand corner is a subscribe button. You can have someone put their name and email address in. They'll get this podcast Saturday morning. They'll get our daily market insight every night the market is open. It'll be delivered right in their inbox. Or if you go to YouTube and just search for Revere Asset, just Revere Asset and hit subscribe, this podcast will be delivered to you in about an hour, finishing about 11:30 Central Time on Friday morning. It'll be up there by 1 before the markets close. That's how our stock nerds do it. And then next to that subscribe button's a contact button. It'll send me an email, and you can just send me an email directly if you want, dan@revereasset.com. And you can ask about a complimentary portfolio review, a stock you want to talk about, or a topic you want to talk about. Folks, do you have an investment dream? Remember, not all stocks are created equal. Learn a better way to invest so that your portfolio does not perish from the earth. Have a great and wonderful weekend, and we'll talk to you next week on Your Money. Not their money, your money. Because it's not how much you make in the markets, it's how much you can keep.